And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a lovely little Westlake Village, California. I'm going to talk about the biggest story of the day, and that is the market breadth, the lack thereof. And of course, you got the AI excitement, exuberance that is going on. And why is breadth important? Market breadth is how many stocks are participating in a given move in an index or a stock exchange. So for example, and I'll get into Bitcoin price action in just a minute here, but the S&P 500 has the top 500 companies in the world, and it is being supported by 10 stocks. 10 stocks, I think I got them up here. Apple, Microsoft, Amazon, Nvidia, Alphabet. Some people say it's mostly just 5 stocks. Then you got Berkshire Hathaway, Google, Meta, United Health Group, and Exxon Mobil, the oil people, the vaccination people, the Facebook and Google people, and Berkshire, well, holding its weight as Mr. Old Faithful, the Oracle from Omaha's stock is still hanging in there in the S&P 500. But the point is that 10 stocks out of the S&P 500, that means that all the gains in the S&P, I think it's 97% of the gains are coming from 10 companies. 10 companies. So there is no market breadth. In general, it shouldn't be 10 out of 500 companies rallying to the moon, right? It should be a rising tide lifts all ships. And I saw a report yesterday that talked about if these 5 major companies did not have the massive gains that they had this year, the S&P would be flat or zero. And again, market breadth is important because it has a direct impact on volatility. Liquidity in the market drives the direction, and we are issuing 1.4 trillion in debt by the end of the year. That is the debt deal, which is going to rebuild the Treasury General account. So essentially what's happened is the Treasury General account has gone down to $50 billion, the lowest level we've seen in a very long time. So what are they going to do? Issue bonds. It's going to provide a massive sucking sound out of asset markets that is sucking liquidity out of the market. Why? If you're buying bonds, you're not buying equities. And eventually that money will get recycled back in. So I think the liquidity issue paired with the breadth issue, there is going to be a lot of, well, let's just say it's the witch's brew for volatility. So we can get big moves to the upside, to the downside. Speaking of that, Bitcoin getting pushed back on the hourly. And this is what I wanted to talk about on Bitcoin's price action really quick. On the hourly getting pushed back, that means I got to let go of this position. I'm going to close and let's see, what did my realized P&L end up coming out on that? Okay, not bad. I'll take it. But essentially what I'm looking at here is the hourly time frame, and there's not a lot. Market is just being real volatile in the last hour. I mean, if you look at the 15-minute, we just had this huge green candle to the upside, and it's getting rejected off the purple 200. And do I see any divergences playing out here? No, not at the moment, unless you have it coming back from that high. Yes, indeed, you would. So if we do confirm this as yet again another lower high, 1, 2, 3 drives, and that could push you all the way down. How would you confirm it on the 15-minute? Well, I'd say a closure below 26,885. By the time most of you guys get this video, more important to look at those higher term time frames, where we are beginning to see the etchings of Bitcoin perhaps putting in a bounce up to this trend line. And what I would say on the 4-hour time frame, bringing it back to the 4-hour range, you got this pivot here at 27,300 and this pivot at 26,558. Any kind of a closure on the 4-hour above or below that area, very likely. Even an hourly is going to get either a move up to probably test this trend line one more time, or if not, well, it probably begins the downside party. 12-hour broke back into the range. And we said after actually yesterday saying, that closure below here very likely brings us back to the bottom side of the range. That's exactly what we got. And this is essentially where Bitcoin would need to start to pick itself up here and put in a bit of a rally. If we do close the day anywhere below 27,218, that will flip momentum back to the downside. On the stochastic, the momentum indicator today, let's check out the 2-day. The 2-day did close yesterday. 2-day will be closing today below 26,750, right on the money there. And then the 3-day, which we had been talking about, pretty much we're moving in concert with the volatility across the daily, 2-day, and let's see, the 4-day. The 4-day, not perhaps getting some expansion here. Momentum is still to the downside on the 4-day. And again, this 4-day actually probably is going to get it pretty good as well. A 4-day closure confirming this as a lower high. It's going to close today. You'd have to close back below 26.3 today. I do think we will catch some bids somewhere in this range if we do come down. And on the opposite side, if we can just get about, back above 28.5 on really this level right here, 29.5. A daily above 28.5 gets you to 29.5. So about $1,000 move if we can get back up there. And any other harbingers of death and despair when it comes to Bitcoin, I think we pretty much covered it on the 4-hour, closing back above here or below here is kind of going to get the next move to the upside or the downside. As volatility is declining here, you would expect the move not to, to wane on the upside move. So if we start to trade sideways again, volatility resets, well, then you can get an explosive move on very similarly to what we saw on the hourly time frame. And we're going to print some bearish divergence on the next hourly closure if we can confirm this as a local high. Also notice a perfect death cross on the hourly. Sucked up into the cross, you expect to get spit back out. The other story of the day is Dixie getting absolutely hammered here. We did talk about it on the daily time frame, saying that, hey, maybe it has one more push, but it looks like things are cooling off as momentum was beginning to decline and we're getting kicked out of the critical zone here. Momentum remains at the downside below 104. So where do you expect the higher lows to come in off of this bit of an impulsive move to the upside here? I would say somewhere in this area. And as long as the dollar can remain above this area right here, I'm going to remain bullish on the dollar for a bit of that W pattern to play out. If we start closing back below the 618 at 102.34, good indicator that, well, risk assets are going to continue to rally. Again, the W we were talking about was something like this, and a move back up to the 0.5, which does make some sense from a dollar perspective. As liquidity gets sucked out of the market, they're selling those U.S. Treasury bonds. Dollars are going to become more valuable as everybody trades in dollars. So if there's low liquidity, again, sets us up for big volatile moves. And typically that's when, the dollar would remain bullish as there'd be a flight to dollars across the board. And yeah, so just circling up on Bitcoin, first invalidation on the daily time frame back above this pivot at 28,384. And then the confirmation that, hey, bear trap, and we're likely heading up to 35,000 would be basically back above 29.5 on the daily time frame, which is this pivot right here, this last high that the daily put in. But as I had been saying, look, don't fight the daily downtrend. This is kind of a complex low. So you've got a lower low, lower high, lower low, and another lower high. So does that beget continuation to the downside? Well, only time will tell. Today is Thursday, and just wrapping up some of the economic data that came out today, that pretty much it was bullish for the dollar. So a bit of a wash here off of I'll just go over it real quick. ADP employment change. So we created more jobs in May. Unit labor costs were down. That's not a big one. Jobless claims went down slightly, bullish for the dollar, and continuing jobless claims down slightly, bullish for the dollar. Initial job claims for May 27 were down slightly, so bullish for the dollar. And This was the only print. Well, it doesn't really show what the consensus was, but ISM manufacturing was down. That was bearish for the dollar. And this one, I think, was the big one right here. ISM manufacturing PMI for May was down, showing, hey, some tightening in the market. And they expect the labor market to tighten up at some point. You also had tomorrow non-farm payrolls, manufacturing payrolls, government payrolls, anything else. So tomorrow would be non-farm payrolls and the unemployment rate. That is going to be the big news for tomorrow. So we'll see if the dollar puts in a bit of a higher low as we perhaps suspected. What else do I want to bring up on the good old charts today? And then just looking at some of the major stocks that are holding up the entire market, starting out with Nvidia, a big gap up. I would say this, as soon as you see volatility start to decline on this one, that'll be your first warning that, hey, the rally is over. But right now it is still currently pinned very, very high. Microsoft, another one that took just a massive leg up this year. If you look at it on the weekly time frame, we're almost back to the all-time highs here. So this would be a bull trap of all bull traps. And the daily says perhaps we got more to go. However, yeah, crosses down below 323. So as long as that dollar keeps coming down, Google, keeping an eye on this one, almost back to the highs this year as well. Still got some work to do. Volatility is now declining. So this one probably peters out here, goes for the gap fill down here. Amazon, just taking out that prior low. This one looks bullish. We got another gap up here. And Amazon still down, way down from the ultimate high. Meta, huge rally, hit the target here at the 618 0.5, fill in the gap. Let's just see if that was the 618 0.5. Yes, it is. Boom. If you break through there, I mean, this is, again, either going to be a massive bull trap because you can see the NASDAQ is in the same position. Hit that 618 perfectly, and that is where you suspect. So can the euphoria carry the market out? Can it carry it onwards and upwards? Well, I'd say it has to do with the dollar. And one thing I do know is when this thing does turn around, it is going to be painful for a lot of people that do not have their risk management properly set. And another one I wanted to check in on was Apple and gold, which Apple, where's my apples? Did I put it? No, here we go. So Apple is almost about to break out to new all-time highs. And going into their investor summit, VR goggle land, whatever they're launching on June 5th. I think that's over the weekend, coming out on Monday. This one, is it a buy the rumor, sell the news type of event? Well, technically, volatility is just beginning to expand as we are approaching the all-time highs. Could it be a triple top? I'm leaning a little bit more bullish, especially if we close anywhere here above this trend line here. That would definitely be kind of bucking the trend. But if you do see us pop back below this trend line, well, that would be a deviation and very likely going to come down a bit more. As far as I can tell, Apple looks bullish. Tesla, another one that looks like it could have some continuations, especially if you take out this high. However, as long as we're below this one, you're going to have, many drives of bearish divergence. And that one I don't have the best read on, but I do want to take a look at what gold is doing. As the dollar is going down, we suspect, well, gold to head up. And in fact, we did perfectly hit the target at 1933. That was a pretty decent play there. Now, are we going to put in the higher low after this, what some might call a complex top? Or are we going to, I would say it's all in the hands of the dollar. If the dollar continues to break down, well, gold could definitely receive some upside pressure. And if dollar liquidity dries up, well, gold is the best, second thing to it when it comes to needing a liquid asset priced in dollars. Gold is, loved by those traditional central bankers. Yep. So 3 drives. This could just be a backfill. Ultimately, this could just be a backfill. Momentum will cross back to the upside above 2,000. Don't think we're going to get there this week as we only have one more trading day left. And daily is crossed up as long as we're above 1730 or 1934. So maybe we come back and test this trend line. That would be very suspect. And then it's lower, higher, not time. So that's it for gold. Short term looks like some upside. And Brent is putting in a bit of a rally here as well. And what else happened? I think the loonie rallied against the dollar. Most of the foreign currencies are getting a bit of a lift off as the dollar is going down. All the other currency pairs are going up at the moment, but still looking a bit more bearish for the rest of the markets. I do want to check in on the liquidity cycle. And the Chinese pumping in a little bit of liquidity here in the last couple of days. Nothing to write home about as we are not seeing something like that. So I'd say this is the level for liquidity to bust on through. Is there going to be a Chinese stimulus plan? Is Hong Kong going to pump some of these coins? And that's the other rumor on the street was Hong Kong is making crypto assets available to the public. Not exactly a whole truth. So Hong Kong is now accepting applications if you are an exchange. So they're accepting applications to apply to be an exchange in Hong Kong. Not the same as making it legal for everybody in China to buy Bitcoin or other cryptos, but definitely a point in the right direction. 2 years down, 3 year is down. And the question is, are they going to have to pull these rates up to attract more buyers? Because right now it looks like everybody wants to be in equities. And why would you buy a bond when, NASDAQ's up 30% this year? Well, maybe, is NASDAQ up 30% this year from the low? 35%, not bad. Not bad. So, do you believe that market breadth has anything to do with these markets? And essentially, as long as, the S&P, is still riding along here at the slightly above the 0.5, giving us a bias for a little bit more at 4,300, but tops are coming in hot. And I imagine as they begin to refill the Treasury General account, some people are going to be taking profits. Other than that, I think I'm going to wrap it up for today, guys. Tomorrow, we got the weekly close for Bitcoin on CMEs. I just wanted to bring this last thing up here, the Gaussian channel on the weekly time frame. And, we have had this general bias that as long as we're above the mean band coming in at, now $25,000, generally we expect some sideways and up. It isn't until we lose the mean band that we can suspect some of those lower targets. So with that said, I'm going to leave you off there and I'll be back with you tomorrow for some more TA updates. Have yourself a blessed and highly favored day. I look forward to seeing you tomorrow. Take care.